Good morning to all traders and welcome to this Thursday's market insights video. A new video for us, a new president for the US. Trump is already out. Apparently the inauguration day went in with no civil unrest issues. Everything was under control. That, though, for the markets was a good session, I would say, because we have actually reached new highs, new all-time highs for a lot of equities. Markets are quite beat in general on Biden's presidency because they are expecting a stimulus, a fat, big stimulus to come in. And that is, of course, going to boost the economic recovery and help get out the COVID much faster than some expect. Well, actually, some expect that we're going to get out of COVID quite fast, but that's a different thing to discuss. So the change of leadership was seen with optimism. Especially also taking into account the gold markets. And this is because, of course, this stimulus is expected to create inflation even sooner than some expect. Now, that said, oil traders might start getting a bit worried, evidently, for two reasons. One of the executive orders that Biden actually first signed, he signed us in around 15 executive orders the moment he took the reins, to be honest. But one of those really making a difference are the joining the Paris Climate Accord, and also what else might be affecting the price of oil is that he scrapped a permit for a crude oil pipeline between the US and Canada. So oil actually is holding well because, we are on a risk-on environment at the moment, but I'm not sure how long this run is going to last. But I see more upside nevertheless. Now, the truth is that gold might be also partially supported by the upcoming Chinese Lunar Year, which is on February 12th. Okay. The truth is that obviously with COVID, we don't know how many people are going to go out and start buying gold, but the sentiment could partially be because of this. So until February 12th, we might be actually seeing prices moving up rather than down in gold. So a big day today for interest rate policy decisions as well. We'll have the Bank of Norway, the Turkish bank, we'll have the South African bank, ECB. It's a bit of a session today. It's going to be likely volatile across the markets, right? But we are going to focus on metals and energies. We're going to talk about gold, silver, oil, and natural gas. Natural gas also seems to be getting stronger and stronger because demand is increasing. We are also in the midst of the winter, so it's likely going to have an impact. Now, last week we talked about this potentially being an ending diagonal. As a friend of ours pointed out, we cannot have a leading diagonal here because wave 3 is smaller than 1 and 5. So we also talked about an alternative scenario that I've been talking for a while, that this is indeed a triple zigzag, right? So with this decline down in mind, you see we've got an ABC. So we were looking before a 1 ABC without a fresh low. Now we're looking for potentially as a first count, yes, an ABC down in wave Z. Now we're moving up. This looks like an ABC. We broke the 38.2, so next level for me is 1881 and then the 1900s. Okay, the 1900s is going to be a good resistance. In case we break above that level, 1961, then this would most likely mean that this is indeed where we ended wave 4. Yeah, and in this case we will have wave 1 and 2, 3 and 4 and 5. Okay, this is probably what will be the case if we don't have a fresh low. This will be an upside move, an impulse on the upside. Okay, but not obviously with a leading diagonal in mind. Now after this, of course, downside for fresh low below the 1760. Yeah. Let's go on silver quickly. On silver, I'm still expecting another leg on the downside. We've talked about this move actually for a while. Yeah, and this is a W, X, and Y for me. We've done obviously a very similar pattern with compared to gold as well here. We're moving up A, B. We're going to see another move on the upside for wave C. If we pull the retracement as we did for the previous for gold as well, we are a little bit higher up here. We broke the 50 Fibonacci retracement. So we might head to 26.42 and then even higher to the 78 Fibonacci, right? So because obviously it's moving, looks like it's moving faster than gold at the moment because we've had a deeper correction so far. Then we're going to get wave C down to fresh lows below the 2160. Perhaps we might just go for a weak attempt towards the 20 level and then move all the way up. Okay, WTI. Last week, we also called this upside move. Yeah, we were expecting this, of course, to continue on the upside. We called 54.70 or so, which means now this is 1, 2, 3, 4, and I'm expecting another move on the upside for wave 5 to take out the wave A. Then we're going to see wave B, and then we're going to see wave C. In the longer term, of course, I'm waiting for the 60 level to be taken out either way. Okay. But also don't forget that I still see this as part of a correction and I'm expecting another leg down. Okay, so look for 54, 73, 55 perhaps, where I will be expecting to get some sort of correction, right? Ideally, these signals are going to be, repeated, unless if, of course, we'll just get a fresh high just above the previous high and then we'll just drop without reaching the 54.73. Natural gas, we called last week this nice move to the downside, actually 2 weeks ago, and then we're expecting a move on the upside. This is a very nice impulse wave 1, yeah, with rule of alternation respected 1, 2, 3, 4, and 5 for wave 2, and we'll move all the way up. Now, we've done the 61, and this false break to me suggests that prices might actually move a little bit lower before we start moving higher. So I'm looking at 2.4, yeah, and then I'm looking perhaps at 2.3 or so. Okay, it could be a motive start rather than impulsive. We'll see how that will work out. So the truth is that I don't see any signals on the RSI on the MACD, right? So I wouldn't be surprised, as we said last week as well, if we break a little bit low to create a fresh low, and then this would become a triple zigzag as well. We need to remain above the 195, okay, in order to consider this as a very nice impulse on the upside. So this will be all the day. Thank you for watching. If you have any comments, as always, we're welcome to go ahead and post them, and I will get back to you as soon as I can. See you again tomorrow.